Hey guys, welcome to the Stock Sale Flyer. I am bullish on PayPal Bank, but not for a lot of the same reasons as others seem to be focusing on. So in this video, I'm going to tell you why. First of all, PayPal applied for a bank charter recently, which has the potential to significantly change the business. Although, as you can see from the bottom of this infographic, regulatory approval is likely to take a year or two. Even though this could take a year or two, the market may begin pricing the stock differently because of this. Although with the multiple where it is, I would argue that PayPal is already trading like a bank despite being a more efficient business. Now, most people are focusing on how this could change the business in terms of its margins and capital structure. People are highlighting that this move has the potential to improve PayPal's margins, as with their current model, they rely on partner banks for parts of their business. For example, Synchrony Bank issues the credit lines for PayPal credit products and credit cards. Should PayPal Bank be approved, PayPal could capture the margin on this part of their business and not rely on an outside bank. You can see this illustrated here as well in the upper left-hand corner of the screen. You can see this dynamic that exists between PayPal and Synchrony Bank illustrated. The downside of this is that PayPal would become less capital light and would handle more liabilities from customers on their own balance sheet, including an anticipated increase in small business loans. As a bank, PayPal would also be required to keep more cash tied up in reserves, and the business as a whole would not be as capital light. It's also likely that PayPal would move away at least somewhat from its focus on returning capital to shareholders through buybacks, although they did just instate a dividend for the first time, which may have been a strategic move ahead of this application to let shareholders know that capital return will continue to be a focus, at least to some degree. That said, as a bank, they will be required to keep more capital in reserves and would also be keeping more liabilities on the balance sheet. While some liabilities could still likely be passed on to outside companies like Blue Owl Capital, who already works with PayPal and who works with SoFi, it's likely that more liabilities would be handled by PayPal themselves, which means financial discipline will be all that more important. That said, if PayPal is to create a new part of the business that is similar to SoFi in the future, I see that as bullish for the company, but not just because of the ability to improve margins. I see it as bullish for the company, and this is the part that I don't think is getting enough attention, because it will allow PayPal to attract, retain, and improve engagement with customers, which is important for the business as the number of active accounts has not grown as fast in recent years, as you can see here. All right, I'm going to move this image of myself over here to the funnel so that you can see this whole graphic a little bit better. So PayPal will be able to leverage existing accounts and offer incentives to have people use PayPal Bank as well. One of the major drivers of growth for companies like Robinhood has been the incentives that they offer customers to use their products, and PayPal will be able to offer customers incentives with an integrated banking, payment, and checkout experience. So now, instead of using PayPal as something outside of your bank, for maybe buyer protection, buy now, pay later, or cash back rewards, banking, payments, rewards, and checkouts can all be under one super app of sorts. And if people are using PayPal Bank as their bank, their regular engagement with the PayPal ecosystem is likely to increase. This can be true for both existing PayPal customers and new customers that PayPal can attract by offering this integrated product alongside rewards. So in short, should it get approved? Yes, PayPal Bank should lead to margin improvement, but I think the increase in customer engagement and the ability to attract new customers is perhaps even more significant. Yes, there are risks for the business overall in this, like potentially issuing bad loans, being less capital light, and potentially being stuck at a lower multiple in the future, but overall, I think it is good for the business because it will allow them to offer a more fully integrated system for their customers. If you missed my recent PayPal valuation video, make sure you check that out. It's linked in the description below. In that video, I tell you what I think PayPal stock might be worth. Also, if you enjoyed this video, please like, subscribe, and click the bell for notifications, and follow me on X at StockSaleFlyer. It would really help me out. Thanks, guys. Bye.